Hi guys, welcome back. Wow, what a day on the market today. In the morning, we have broken the all-time high for Nasdaq. You see, we opened up with 1.1% of increase because the earning of Facebook and Apple was beyond expectation with such a great increase. And since Nasdaq was just one small step away from breaking all-time high, so of course the market sentiment was positive enough to push it. But then the whole morning it just kept on falling like a flood to come down to be under 0.7% and then bounce back up later. So I know I said I would not do market updates, but I think today is worth making a video about. Especially we have a lot of anticipation over some of our stocks like NIO earning coming up and LKCO's hearing coming soon. So I want to give you a little bit analysis to share what I think about what's going on right now. So first of all, ever since we have bottomed at the end of March, Nasdaq had been running quite strong every day with a gap up almost going on fire while the volume was decreasing at the same time. So at that time I said it looked like a short squeeze for me. And a lot of people were still quite fearful and traumatized from the big falling previously. And also I said that whoever wants to sell out would have sold already in this fall for the correction in 1.5 months. And whoever that have stayed probably would likely to remain because they're probably more long-term investors. Not all, some. And then when we have reached near the all-time high, clearly forming a W-shaped bottom for the correction. This is when we got into a consolidation for the expectation of the earnings coming up. So during the whole run up from the bottom to near all-time high, it was mostly the FANG stocks that was driving up the index. The FANG stocks and the mega cap tech stocks, if we remember. While the index was pulling up, all the small caps were falling. And Russell 2000 were doing more correction, mostly because the market was expecting the exceptional earnings from the FANG stocks anyways. And also because of a lot of the FANG stocks had been consolidating on the sideways for so long already, more than half of the year. So it's expected for them to have a breakout anytime. Last night had reported exceptional earning, and today you see it opened up as high as 7%, but continued going down afterwards. Look at the volume here. It's the biggest volume since September last year. If you look at this, that was beginning of September. Here, obviously, institutions were taking profit because of such a run up since March last year. And now, Facebook had recently jumped up 30 to 40% from the bottom, pulling Nasdaq reaching the all-time high. So it would make sense that the smart money is taking profit again because it's enough for such a short period of time. So that would explain why the Nasdaq had reached all-time high today and yet a big sell-off happened with volume. It was a big run-up since the bottom and it's enough profit because usually when the index reach all-time high, it would mean the index can keep running like here. It reached the all-time high and continue a bull run. And also if we go further down, last year here, it had reached the all-time high and then continue another bull run. So this time I think there are definitely some selling the news action happening because first of all, Nasdaq and all the tech stocks had been running on full turbo for more than a year already since it bottomed last March. And second of all, in a way, I think it's expected for the tech stocks, the FANG stocks, to have good earning anyways. For the last year, since everybody was locked down, forced to stay at home, so mainly benefit the tech stocks. For example, Apple, so many people had to buy more electronic devices last year for multiple reasons. First of all, work at home. Second of all, online education. So many parents had to buy a computer or iPad for their kids to go to school at home. And third of all, the stimulus check. People had more disposable income. And fourth, They have no place to go, no place to spend money, so might as well buy themselves some treat. Then of course digital device and gaming would be one of those top choices. So I think it's expected for Apple to have good earning. And also if we compare to the first quarter of last year, then of course the increase would be huge, because last year a lot of the manufacturing and the selling were basically stopped because of the COVID. And also I think the market had always been quite optimistic about the M1 chips anyways. So I think there were a lot of smart money or speculative traders going with this run up for the earning of Apple, because most people expect the earning to be good anyways. But what's surprising though, what's unexpected, was the performance from the Chinese sales, the strong rebound from the end of last year. So a strong earning, but the share price opened up high and continue selling off with big volume too. So I think the smart money are taking profit here, selling the news because the good earning had been priced in during the run-up, in a way that it's expected for the FANG to have great earning anyways. But if the earning missed, then it would fall much harder, like what happened to Netflix. On this day, when the earning reported, it was mainly because of the expectation, the outlook for the year of 2021, because most people are concerned whether the big techs can follow up with another great year of increase after such a good year of 2020 because of what happened with COVID. So now a lot of big techs are expected to have slow growth for the year of 2021, and some are in fact expected to have decrease as well. So today Apple had closed with 0.07% dropping, which is a result of a very good earning. And if it's a okay earning, then it would drop like Netflix. That's what the market is doing right now. Does that mean Apple has no more room to grow? And does that mean all the FANG stocks had all the good news out already, and then it's gonna drive the Nasdaq down to further correction? Not necessary, because we see that Apple also announced the $90 billion purchasing program to buy back their own shares. So we can expect slow and steady growth from Apple. So that's why I think the smart money have been taking advantage of the good earning to be the expectation, so they can take some profit here. At the same time, can shake out some traders, the short-term investors. Because after this correction for a few months, I think a lot of investors are still quite fearful on the market. So if the market drop like this, who's gonna run faster? I think the retail investors can run faster than institutions. They have much smaller portfolio than the institutions, so much easier to sell off. They still need to do some shaking, some wash sell, and some pull up as well. Like I said before, every disaster is a speed up of innovation, because it helps change people's habits, behavior in a very fast time. Because people's habit is the most difficult to change. As I mentioned many times, it requires usually a lot of money to change consumer habits, consumer behavior. But the natural disaster, COVID, just was a gift to a lot of technology companies and force people to change their behavior. Like most people need to buy everything online, and even though they did not want to learn it at first, they were forced to learn it. So that is why last year it was a great year for technology. A lot of tech stocks grew very much, and for those tech stocks who had many jump last year with their earning, then from now on all the earning would be a real challenge for them, because it's a possibility of all the good news coming out, then the sell the news action would happen. For example, Pinterest. Last week I talked about Pinterest. I said that the earning would be a challenge for it, and then that's why we saw this bump as the earning, a big drop. It was here when people asked me if it's okay to buy the dip, and I said that it would be quite challenging for Pinterest to keep up with the growth like last year. So I do think it would need some time to cool off. So I did not recommend to buy the dip. Because last year I remember holding this stock every time the earning happened, there was a sudden jump on the share price because it was beating expectation that how much the COVID and the lockdown had benefited these tech stocks. So every time the earning can give their share price a big increase. It's the opposite now because investors are mostly concerned whether the tech company can keep up with the growth that was mainly speeded up by the lockdown. And same thing with TDOC. Today the earning had reported and it right away dropped at most 10%. It's not even how the company had performed in the last quarter. What's really more important is the outlook of the coming year, whether the company can keep up with the growth after the recovery. So most of the tech stocks that benefit from COVID would be expected to have sell-off while people are expecting a strong recovery and reopening from now. So does that mean the tech stocks are not good to invest now? Does that mean we need to move on to recovery stocks and value stocks? So it really depends whether you want to invest for the long term or short term. Because in the long run, technologies always move up. Because the transition from the traditional business model to the new revolutionary business model, it's only a matter of time. It's not a question, no doubts about that. That's why I emphasize on the speed up, because COVID only speeded up the evolution from old to new business model, from old to new technology. It's a speed up, not a temporary change. So at most, it's just happened that the big growth from last year had priced in some growth for the future and the expectation of the good earnings coming up. So at most, it needs some cooling off, some resting, some consolidation. And at some point in the future, I do expect them to come back because technology only goes up. Because as we are still in a low penetration of the market of these techs mostly. For example, telehealth, even though it has been speeded up by COVID a lot last year, when you consider the whole global market perspective, it still has a lot more room to grow. If you consider a much longer term instead of focusing on the short term. So I took a position again today and bought the dip. It's a small position because it has dropped to the support where I think the risk and reward ratio is okay. If you have been following my channel, you know I took profit from TDOC back at the end of January and closed my position already. So now I just open the position again and see how long it would take to cool off. But in the long run, this company has a long way to go, I think. Unless the fundamental has changed or the company did not have a good fundamental to begin with, then I would worry about it more because given the longer period of time, the market can digest and resolve the valuation for good and bad companies. If it's good fundamental, the share price would grow back. And if it's bad fundamental, it might never come back. Now, after we talked about the bigger tech, we can also take a look at the small caps. Today, a lot of the small caps had a little bit of dipping because the Russell 2000 dropped 0.37% and continued dropping a little bit after market. It was a little bit of a sell-off with increase of the volume. When you compare to the previous few days, it had slowly decreased of volume. But it looks like a pullback after a strong run-up for the past few days. So now it's backtesting the support. Before it was a resistance to be at 226 and now it backtested the support today and bounced back up. It might still take a few days to consolidate. If you look at the Bollinger Band, it has reached the top range today, this morning. And you see that every time it reached the top, it would be normal to get back down and perhaps backtesting this moving average. So at most, I think it can come back and backtest here between 223 to 226. But it's not necessary to get down right away. On the other hand, we see that the Chinese ETF dropping quite a bit today with 2.5%. So I see our portfolio was not very happy today. So it was 2 weeks ago when everything was dropping like rocks that I posted, I see good news coming because I see the Chinese stocks rebounding soon. And ever since we see them going up almost every day, it's growing quite strong compared to Nasdaq that's mainly moving on the sideways. So you see a lot of Chinese stocks outperforming for the past a week and a half already. So today for it to backtest the support and do some watch sell, it's quite normal. In fact, in the Discord yesterday in the morning, I already said that it has reached the resistance level at around 66 to 67, and I expected that to have a pullback anytime soon. It was yesterday morning I used the K-Web instead of the PGJ, and I set the resistance is at 80, so expect some pullback later. So this is the K-Web. Yesterday it reached as high of 79.1, so near 80, okay? And then meet the resistance and come back to backtest the support. So I think it would need some consolidation, and the next support is here around 75. So I think at most it can come back to backtest the support, maybe give it a few more days of resting. After a strong run up like this, it's normal to consolidate a little bit, shake off some short-term investors, because people who bought the dip here need to take profit. Also, I think it's some sell-off before the long holiday in China, because on May 1st, there is a 5-day long holiday in China that the market would be closed. And I think investors usually would be worried that there might be some black swan news happen during the long holiday. So that's why they would sell off before, just to keep their mind more at ease. But at least we see the Hang Seng Index had finally broken the resistance of the 60-day moving average. Yesterday in the morning, I said in the Discord that I would expect the next trial to succeed and stay above the 60-day moving average. And it did today to gap up above. So it looks like a breakout, but we also need to watch out for the volume because it was shrinking. So I hope it's not a false breakout. Best case scenario, it would consolidate here above the support. But out of all the Chinese stocks, I think everyone is mostly concerned about NIO today because it had the drop of 5%. This red candlesticks, I think it scared a lot of people away. And because we have the earning to come up after market, so I think there were a lot of selling happening before, especially when you look at what happened with Tesla. There was quite a sell-off after the earning. So let's take a look at NIO's earning. So sales of 1.2 billion, up 481% year over year, but mainly because of the small number compared to last year because of the COVID. The loss of RMB 4.88 million, I think it's a translation problem. It should be 4.88 billion and $744 million for stock compensation expense and other one-time items. So loss of 4 cents per share, which already beat the estimate of loss around 10 cents per share. So that is a good sign, but I think investors are more paying attention to the margin, which has reached 22.1%, which is a big improvement for NIO because the same time last year, NIO was still negative on margin, meaning that every car they're selling, they would lose money. And it was only last year in August when NIO announced that it was turning positive margin, so above zero. And we see that less than 1 year later, just a few months, it has already reached 21.2%. So that's a pretty good improvement on the margin. And it just proves that NIO's fundamental is getting better and better. So now the major concern is still the chip shortage. So I think the earning for NIO was really not bad, especially the big improvement on the margin. And I think more and more good news would be coming up later. With NIO, we see pre-order of ET7, especially after the Shanghai Auto Show. More and more Chinese consumers can see and touch and feel the new model, not just through the internet. And after that, they share their photos and experience and spread it on social media, and so I would see the pre-order of ET7 getting more and more in demand. But a good earning doesn't always happen to the good share price. So let's see what would happen to the share price. After the earning, I think some of us are worried that there would be the sell the news action as well, or form another bottom. Well, I think the sell-off happened for a few reasons. First of all, the market was doing correction for the small and Chinese stocks. And second of all, a lot of the short-term investors, they bought the dip for the earning and then don't intend to keep it through the earning because of all the earning bombs recently, even for Tesla. So I think some people might even open a short position here. And last, if people bought the dip here, including myself, that's 20-something% profit already in a few days. So that's enough profit to take. So that's why the sell-off doesn't have to be because the market is not happy with the earning. And right now, I think NIO has passed the previous high. So it's showing signs of reversal from the bottom for now. And some people are worried this is another bull trap like the previous rebound in mid-March and early April. Some people are worried that this is another bull trap like what happened here in mid-March and early April. Because every time after it run up, it falls back down. So let's see. If we turn on the Bollinger Band again, we can see that ever since February, the beginning of the correction, when it broke the support of the medium indicator, the whole time it was staying below this, right? You see, it broke it here, and then the whole time it was just staying below this line, got rejected once, and then got rejected again, and finally this time it broke through this medium line, and right now it's exactly back testing this range. For now it's staying above this, and I expect this line to continue to hold for now because it's basically the indicator of whether it's a bullish or bearish pattern. So if you're worried you might forget clicking on this channel, you can turn on the bell button besides the subscribe so you can always get notification when I upload a video. So it has been a few days since I uploaded a video, and I hope you did not forget about me, and yes, I miss you too. Within these few days, I've been doing a lot of research and analysis on EH because I do think the fundamental has changed since I first invested in this company, and it's really necessary to give it another look, a deeper look into the new perspective. And I will share my gathering later and probably put them into episodes like my NIO videos into different episodes because it's too much information. And I hope you look forward to it. And if you have enjoyed this video, please give me a big like and write me a great comment. And I will see you in my next video. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.